The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, dare I say it was a bit of a risk-off day on Monday coming out of the three-day holiday weekend. We had a lot of volatility in the outside markets, stocks, dollar, crude oil, gold to the upside. That kind of weighed on commodities and the cattle trade on the day Monday. Hogs did get a little bit of green on the screen. Let's talk about this and get some perspective on things. Joining us, John Heimberg with Total Farm Marketing. And John, hope you had a great Easter holiday weekend. And coming out of a three-day weekend, you never know what you're going to get. It's hard to kind of really know what to expect. And lo and behold, we got a risk-off day with a lot of it tied to those outside markets on Monday, John.
Yeah, we do. A lot of it was tied to the – can we start over?
Yeah.
I just started brewing. I can feel it.
I did it too myself earlier. I stopped out at the chiropractor right after lunch and got McDonald's, and so the salt from the fries is just sitting in my throat. So the
whole time you're doing your intro, I could just feel that burn in. I'm like, oh god, I'm not gonna be able to get talking here. All right, my bad. Let's do it again.
Okay, take two. Here we go. Well, dare I say it was a risk-off day on Monday. Coming out of a three-day holiday weekend, we found plenty of volatility in the outside markets with stocks, the dollar, crude oil lower, gold to the upside, and that largely worked its way over into grains and oilseeds and the cattle trade on Monday. Let's talk about this. Joining us for perspective, John Heimberg with Total Farm Marketing. And John, hope you had a great Easter holiday weekend. And looking at the markets, it really felt like, well, you never know what you're going to get coming out of a three-day weekend. I feel like it's hard to know what to expect. And here we are with a bit of a risk-off day really tied to those outside markets on Monday, John.
Yeah, that was a big factor today. I think what's going on in the equity markets with the strong selling pressure that we're seeing there, pushing over 1,000 points lower here at the lows of the day. And, that just kind of gets that risk-off mentality going across all the marketplaces. And we saw that happen, I think, today. It just kind of weighed on things and just bled them lower as the day kind of went on. It's just nobody wants to stick their neck out against potential major losses in another marketplace like the equity side of it. But, with that, you got to give a little nod to a couple things. Old crop corn, I thought, hung in there beautifully today. I thought hog market stayed in there very nicely today as well. And, and really the losses in the grain side, given where we've been over the last couple of days, wasn't that significant. We watch what the funds have been doing here, and they've been buying this market pretty aggressive. When I say this market, I'm talking agriculture commodities in general. They had their largest buying week of ag commodities since October here this last week as the money poured into the corn, soybean market and also, supported up some of the cattle and the hog markets as well. So it's going to be interesting to see how things kind of play out here as we go forward. As we get to some very key times in some of these commodities between livestock and summer grilling windows and obviously the planting window here in the grains.
Well, thinking about the grains and spring planting, I know quite a few folks were rolling planters ahead of the rainfall here over the weekend, and a more active pattern is set for really the rest of the month, but still kind of a breakneck pace happening here. And obviously weather has to be one of the dominant market drivers here in the grains and oilseeds outside of a day like Monday with some of this outside market volatility. I mean, talk about what you're hearing from producers with planting and how the weather piece is playing in right now, John.
Yeah, I think planting pace got off to a pretty strong start in some areas last week as guys are kind of looking at the long-range forecast. As, soil temperatures may not have quite been where they needed them, but let's get going, and they got things in the ground. We're watching this week staying a little bit on the wetter side, at least in our area of the world. So that'll kind of keep people out a little bit here. But real curious what those planting progress numbers will be this afternoon when they come out here in about an hour or so. Biggest thing, though, too, could be what's going to be that bean number. Because, again, we've got this trend over the last handful of years. Let's plant beans first, give them those extended growing days, then come back with the corn. I talked to one producer, Eastern Iowa today. He was 50% done with beans after last week. Just kind of show you the pace that we can get to. Planning delays, if they bring rallies in the markets, typically they're usually met with selling unless there's some type of an extreme delay that's going on. Because we just got that technology to get these high-speed planters going, and we can cover a lot of ground in a big hurry. So don't be shocked if we see some heavier planting numbers maybe today, because especially in that Western Corn Belt, with the weather that was available to them last week and with the technology that we have to really get some stuff into the ground.
You hit on it. Corn, once again, resilient in the face of all this market volatility and noise. And, we've touched on this, and I've talked about this with a number of folks. Corn has been doing this now for quite some time amid all of the external factors, whether you're talking tariffs or ship fees or whatever's going on economically and more. Here's corn just kind of, steady Eddie, so to speak, and not really seeing a lot of swings one way or another, John.
Yeah, especially in the old crop market, that's the side that's got the most strength. And there's really good reasons, obviously, there. We saw export inspections today, 1.7 million metric tons, or about 67 million bushels above expectations, just down from last week's 1.8 million metric tons. So we're moving corn out here. On top of that, sales still continue to be very good. In fact, that export inspection number today, currently with the new USDA target, we're about 180 million bushels still ahead of pace, and that's something that's going to probably have to get addressed down the road in terms of, the USDA making some additional demand adjustments in terms of adding exports in, maybe bringing that carry out down. I think that old crop market's still thinking we got closer to a 1.4 billion bushel carryover than a 1.465. So those are things that's keeping support in that front end of the market. The back end's obviously going to watch those planting delays. When I say back end, the new crop prices, I'm kind of still the one in the camp here too, that 95.3 acre number probably grows a little bit on the June report, just given some of the weather that's out there, plus just also the levels of potential profitability, or at least minimize losses in that regard, and depending on your balance sheets, that corn market does offer in that regard. Plus, again, you still got a little bit of a friendly global supply picture that leaves some volatility for the summer weather in corn that could give producers opportunities to make some profitable sales if the market were to behave. So we'll have to kind of watch those things going forward. Still, the wet blanket on top of that soybean market's the large Brazilian supply, Argentina supply of beans, just keeping prices lidded. But got to keep an eye on that soybean oil market. It's had a nice rally again. We've had great export sales and shipments of soybean oil. You saw that biodiesel number, that mandate number come out here about a week or so ago, being very friendly too. So it's kind of helped supporting that bean oil market, because realistically where the global situation is right now, U.S. beans need that domestic usage, and soybean oil exports probably more than we need the actual bean exports to make sure we're grinding through supply. So that's something that could give this bean market, and has given this bean market a little bit of a lift, has been the strength that we've seen in that soybean oil market.
You brought up South America, and I know you have some colleagues down there that you talk with frequently, and I would say there's not really much concern with safrinha corn right now, except that 2-week forecast is looking a little dry, and maybe if it stays that way, so this late planted safrinha corn could be in trouble. But I say that with a hard maybe, because I know a lot of the NDVI values and more still look pretty good in Brazil, right, John?
Yeah, some of the wet season rains that they're counting on have been there and actually stronger, or maybe running a little longer than anticipated. And you just heard some chatter over the weekend too of just, what's good is going to be very, very good, to the point maybe we got 125 million metric ton crop out of Brazil, or a little bit higher. That's going to come into play when it gets to that August, September, that type of time frame window. It's going to make it hard for prices to rally, especially if we have a decent year going here in terms of weather. So this global supply picture, even though it's still relatively tight, it's going to be kind of a hand-to-mouth supply side of it. And Brazil's got some extra supplies out there. Again, they want to move that corn. They keep it a little bit cheaper on the market. That could be just a limiting factor over any items that we could have in terms of a market rally in the summer. So something to keep an eye on here is some of the trends we saw both Argentina and Brazil in the last set of USDA as well as WASDE reports bump those production forecasts up. And that might be a trend we see here for the next few weeks as we get closer to their harvest and that crop finishing out.
It just feels like across this grain and oilseed trade, John, that barring a black swan and some of these outside market moves and the headline risk, it's that and weather. There's not much else really driving this grain trade right now, John.
Yeah, realistically, and we're getting to that time of year where we're going to start focusing on the development of that 24, 25, 26 crop and getting things in the ground. And obviously the tight supply picture leaves things a little bit open. It's going to keep, because of that factor, I like that July corn, especially in that the spread against December here. We could see that really move if we continue to see good front end demand, especially with that back end, looking at bigger acres and if weather's good production, but that's front end supply. As we kind of get through here, we're getting to the May basis window. We clear that window. We get to that May report where we get those first numbers for 25, 26. If we see some more demand cuts, demand hikes on the old crop side, cutting that carryover, that's an area that we could see some movement. We've seen some good price movement now. July holding around 490. What's the upside? Can we get back up to those highs at 520, 519 area? Wouldn't surprise me if we do something that as we get a little tighter in terms of the contract life as well as the supply side that, as producers get in the fields and get going, end users are still looking for bushels, A, to ship, B, to grind for ethanol. So they're going to start bidding up. I've heard that from some people that those bases are getting a little bit more friendly in some areas as guys are starting to focus away from marketing their corn and getting ready to plant.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's go over to the protein sector. Cattle futures under a bit of pressure Monday. Have to think tied to the volatility in outside markets. I know last week we saw some 212 bids passed on in the north. I heard some of that chatter. And you and I were chatting about this before we went on the air that these markets are kind of starting to navigate their way back to being the cash having such a big influence, I guess is what I would say. We've seen some volatility in futures lately, but a lot of that focus seems to be coming back to the cash side of the market, right?
Yeah, I think that's going to be the focus here going forward, barring any major outside influences. Last week, the cattle market kind of diverged away from the equity markets. Felt like as the equity markets kept their steps going lower and lower and lower today, it just kind of finally hooked onto the cattle market and pulled them with. But now we got through cattle on feed, not a bad report at all, fairly neutral, maybe the touch even friendly in some areas. You look at that placement number, people say, 5% over last year. Well, let's look at the facts here. Last year, the April report, we were down 23% from the prior year. So I went back, looked at that 23 report. We placed about 1.96 or 196,000 head. This year was about 179. So we actually still placed less cattle than we did 2 years ago in this time frame. Obviously, watching what's happening with heifers in terms of them being in the rotation. There's talk out there that maybe that breeding stock is starting to grow a little bit. That even tightens up the front end cattle supply a little more if those heifers aren't on feed. So things that I like going forward. Now it's about retail prices. Do we say, we're getting into that summer grilling season or late spring grilling season now that we're post-Easter. You'll see retailers start preparing for that. If we can keep retail prices in that upper 330s, today was 332, I believe, at midday. We need to get back 335, 340. That at least keeps a little meat on the bone for the packers to some extent to maybe push those prices out. So we'll have to watch. But I think, again, right now, markets look a little undervalued according to what we saw for cash trade. Definitely looks that way in the feeder market with strong cash market prices. I mean, you got an index at 293, and we're trading well under that in the May as well as the next month contract. So the August contract. So there's some value that could be there, but we may have to ride out some negativeness, post-report type selling here in the short term. But I still think dips are meant to be bought, just given the supply picture that's out there in the cattle market.
Well, as we hit grilling season, what is that wall that the consumer, we hit that the consumer doesn't want to pay up for beef? For instance, I went to the meat case last week, and part of it was I didn't have a great selection to look at, but I saw two puny New York strips that was going to cost me about $25, and I saw 2 real thick bone-in pork chops that cost me $6. I went with the pork chops. I mean, I think a lot of folks are making some of those decisions right now. So, that's something that I'm curious to see is, do we hit a wall here at some point? And then if we hit that wall on the consumer side, do traders still continue to pay more in the countryside, John?
And the balancing piece of that is going to come down to, like you just said, not a lot of selection because of the tightness of that beef supply that's getting into that case. So the consumer that still wants to pay that premium is going to do that because they just want beef. And that's still going to add some value to the carcass side, throw into some of the concerns regarding imports and things of that nature, only tightens up that meat case even more. So, so that's going to be that little outlying factor that, still needs to be figured in here is just, the U.S. consumers' demand or appetite for beef has just grown here, whether it's still in trim for hamburger or lesser priced cuts in that regard. But there's still enough consumer base that's still buying those high price cuts that keeps them supported here. Maybe the biggest thing we got to watch is the export side of it too. Because of tariff situations, does U.S. beef started falling out of favor? In some of those international plays, we saw an article by Reuters of restaurants, in China with Americanized menus have kind of gotten away from offering beef on those menus. So that's a big piece going forward. It's still going to be that consumer dollar. It's going to be a very interesting piece as we get into summer.
John, how about in the hog market as well? Let's touch on that again. A decent day on Monday on the futures side. Any other notes on the hog trade right now?
Yeah, pretty choppy day today, kind of consolidated. We look like we've rallied to some resistance points here and just can't seem to get through that. And obviously maybe the plus side of the hogs today was the fact that maybe in backside of some cattle hog spreads. We'll have to see. A lot of barriers over that summer contracts around 99. If we can get through there's some holes on top of this chart that make this market look a little undervalued. But again, right now it's going to be still about that demand and that export side of things. Where are we there? Cash trade's gotten a little bit stagnant right now too. So that's just kind of keeping a lid on prices here. We've had a pretty good recovery to get back into this $97, $98 window, on those summer months. Still feel like we got some room to go, but maybe we're going to chop around here for a little while, waiting for some of the outside stuff to settle down. But again, I still think hogs are a little undervalued. If we can get through that, the $100 barrier on the June or the July contract, leave some room up to the upside. There is a gap on that June chart up at 104 area that could be a target point for some traders if we get the momentum to start going that way. So again, a little optimistic the hog market, just given where it's at on the charts right now. But again, that cash market needs to start firming up again. Just that'll help incentivize that hog market going into the summer months.
John, any final thoughts? Anything you'd reiterate for folks here on the show today?
Again, everybody's optimistic, especially when you're putting stuff in the ground, but keep an eye on value when it's out there, especially in that corn market, December corn, 460 area today for the new crop. There's a lot of reasons this market could be well above or well below that level come harvest time. So make sure we're doing some marketing or building some type of a floor. I've been still trying to get 450 puts bought for December corn just to have that floor in place, because if we do have a good summer weather, that 450 put's going to look pretty good because we could have a pretty decent supply of corn, especially if that acre number does come higher. Now, obviously on the flip side, carry out's tight on the old. That's going to bring carry in tight coming into that new crop. Then we throw a little bit of weather, next thing you know, our yields at a 175, and all of a sudden now we got tight supplies on the new crop side. So have balance is still going to be your key, and just go from there. Again, if you're not looking at sales, use those puts, have that floor in, and go to a place from there.
John, if folks want to reach out for a conversation with you at Total Farm Marketing, how can they do that?
Feel free to give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com. Love to reach out and chat with you. Don't forget about the marketing side here, especially as things get really busy in the fields.
John Heimberg, Total Farm Marketing. Always good to hear from you, my friend. Thanks for joining us. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.